Hey guys, welcome back to Trading with Jen. How do you know what type of trader you are? First of all, let's go ahead and learn that there's definitely four different type of traders. We have the scalper, we have the day trader, the swing trader, and then the fourth one, which is something that rarely anybody does unless you're like investing an X amount of shares, in stock equities, which is called position trading. We're currently looking at gold. We are on a 4 hour time frame currently. So, in order for you to be considered a scalper, you want to be able to execute on anything under 30-minute time frames, right? That essentially includes whether it's, the 15 minutes, 10 minutes, 5 minutes, 3, 2, 1, and so forth. You and also seconds, guys, okay, which is very dangerous, but yet still very addictive. Now, the reason why I say that is because scalping happens to be one of those forms where, one, you can get a whole bunch of practice. You can do a lot of back testing through scalping and also putting an edge onto your skill set. But scalping definitely shows you that, hey, you know what? You can back test here, you can take trades here. There's definitely a lot more volatility because a lot more candles are definitely developing along the way. You're still going to do a full analysis breakdown, right? If you guys have seen my other videos, in terms of, market structure, I do break down market structure in two different parts. If you guys go on my channel, frame would day trading be classified as? That would be more so executing on a 1 hour. I would say 1 hour to 30 minutes, right? Anything under 30 minutes is essentially just scalping. Okay, so I want to say 1 hour, perhaps even 2 hours. I want to say 2 hour tops would still be considered to be day trading. Why? Because it takes time for candles to develop. And day trading, essentially, you want to be in and out within the same day. Scalping, on the other hand, you want to be in and out on a shorter time frame within that day. Make sense? Okay, so you could do that on a 1 hour, or you could execute on the 2 hours tops when it comes to day trading. Swing trading. What is swing trading, guys? Swing trading, you're definitely holding for a longer period of time. You're still looking over market structure. You're still doing a whole top-down analysis from a higher time frame to a smaller time frame. Just to be a little bit more clear, when you do swing trade, you want to be able to start your analysis anywhere around the weekly. Okay, so the weekly time frame is ideal for swing trading. Sometimes every now and then we have traders that do pivot to the monthly just to kind of see where it's at, especially if it's sweeping some type of liquidity, right? Based on a higher time frame, you want to be able to spot that. Now, you're still going to have to analyze the weekly, looking at the trends on the weekly and executing anywhere between the 4 hours and the daily time frame. Now, what happens when you execute on the 4 hour or daily time frame? Obviously, this particular trade is a long-term trade. For instance, if we go on a 4 hour right here and we're just kind of, dissecting what's over here, we do see some equal highs, right? So the moment you see it rejecting more, so especially on a bigger time frame, and you do execute that particular trade, let's say you're shorting it from over here, it swept some type of liquidity, just know that this is going to be going on for days, right? As you can see, we did make a trend right here from, lower low, lower high, lower low, lower high to breaking this lows right over here. Okay, so that right there, because we are on a 4 hour time frame, just count the candles, right? Simple math, 6 candles of 4 hours. That's going to be 6 different candles, right? It's apparently going to be 24 hours, guys. So every 6 candle is 24 hours. We have, I want to say about a week's worth. Okay, just to make it easier. I don't know why I didn't do this to begin with. Look at over here, guys. This is Friday. Okay, from last Friday up until this current Friday. So yes, right over here is definitely a whole week's worth. You're holding for a whole week. That is what is considered to be swing trading. Okay, 3 months, even a leap year. Okay, so which is essentially 6 months. Okay, leap trading, whatever you want to call that. It's definitely on a higher time frame. I wouldn't recommend position trading, especially if you're a beginner. If you are a beginner, I do highly recommend scalping for the moment. That way you can get a lot of back testings going on. You get to get a little bit more familiar with the market structure, I mean, excuse me. And then of course, if you already do an analysis on one, then you want to be able to go ahead and switch over to a different pair, back test that more. So I'd say hold on to three different pairs, get to know them really well. Okay. So guys, that is um that is what type of trader are you in a nutshell. Figure it out on terms of what type of time frame do you like to scalp on, or sorry, scalp on, to trade on? If it's definitely a lower time frame, you are a scalper. If you're more of a, I'm gonna set the trade in there in this in the morning and then perhaps close it by lunch or before the day is over, you are a day trader. If you are trading on higher time frames, 4 hours daily, and it gets prolonged for days, perhaps sometimes even a week, you are a swing trader. And if you did find this helpful, guys, don't forget to click like and follow for more of my weekly videos. See you guys.